This is not financial advice, not legal advice, for entertainment, educational purposes only, and anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. Listen, the payment for order flow is big business, and they are taking money out of retail investors' hands. Robinhood was paid $1.4 billion in payment for order flow on options. Okay, $1.4 billion on payment for order flow on option trades, and an additional $265 million for regular trades. This tells you that they are making a majority of their money from the options. Okay, they are making a majority of their revenue from the options. And the thing is this, who ends up losing? Retail investors. They need to take payment for order flow and get rid of it, because it gives the bad actors such an unfair advantage. Can you imagine? You want to buy a stock. It's selling at $10, or so you think. So you put in an order for $10, but in actuality, there's somebody willing to sell it for $9.90. Being that they know what you're willing to pay for it in advance, they get to buy it ahead of you at $9.90 and then split that 10-cent difference between the market maker, whether it's Citadel or some other company. Because if Robinhood is getting $1.4 billion for the options, it's not just Citadel that's paying them. They're getting money from somebody else also. They're not just paying for order flowing with Citadel. They're paying for order flowing with other companies also. There's no doubt about that. But going back to the example, you want to pay $10 for it. They can get it at $9.90 because they know you're willing to pay $10. They buy it at $9.90 and they split that 10 cent, 5 cents for Robinhood, 5 cents for the market maker. And this might seem like only 5 cents per trade or 5 cents per share. But when you're moving millions or billions of shares every single day, the numbers get outrageous, like $1.4 billion. The difference between the bid and the ask on the options is another way that they're killing us. They're killing us because a lot of times you might put a bid and ask number and they get it for a whole lot cheaper and they keep the difference. And the reason they get it a whole lot cheaper is because they know what you are willing to pay. And because they know what you're willing to pay and they know somebody who's selling it cheaper, they buy it cheaper and then sell it to you. So you are not getting the best price possible when you buy shares. You're not getting the best price possible when you buy options. But they do it every single day, and they make an obscene amount of profit. Yet, SEC knows, DOJ knows, FBI knows, and they do absolutely nothing about it. In my opinion, payment for order flow should be replaced with something else, because it gives Robinhood and the market makers a very unfair advantage to take advantage of retail investors, take advantage of pension funds, take advantage of institutions that follow the rules. Anyway, please leave some comments. Tell me what you think. Do you think that Robinhood and the people they have payment for order contracts with should be able to trade ahead of retail investors and make an obscene amount of profits off of our sales or our buys? Anyway, have a great day. God bless, and I appreciate y'all on this journey with me.